Hello, 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 hello. Can you hear me?
Hello?
Can you hear me?
Not well.
Okay, maybe it is the problem of connections.
Yeah.
So I see you are still few. Please ask your neighbors to join.
Okay.
Reina is around. Please ask your neighbor to join. We will be starting in next 10 minutes. Please ask your neighbors to join. Can you hear me? Hello.
Yes. Hello?
So are you ready to start class?
Yes, we are ready.
Okay, thank you for attending. I see that the numbers is still too low. We expect more than 50 participants, but you're still 4. It's okay. We can now start. Let me introduce Mr. Jamari Nambajimana, who is going to help you to revise this model of public finance management. Mr. Jamari, can you hear me? Jamari? Hello?
Hello. Oh, sorry, I was talking muted,
Okay.
but now I am there. Thank you, Mr. Olivier, for the introduction. I can see 4 attendees. I can see Giselle. I can see Theonest. I can see the second Giselle. Maybe it's the same Giselle. I don't know. We have 2 Giselles here. I can see 2 Giselles. I can see Theonest and somebody called Rwanda. I don't know who is Rwanda. But I think it's high time that we start. Do we need to wait for anyone, or we just go straight forward? We can give them like 2 to 5 minutes and we see if there's anybody joining.
Maybe
We
you
can
can
start
start.
because studying is independent. Maybe we can wait and just erase our hours while not attending. It's better if
Okay.
we start because it has been just around 50 minutes.
I think we can start. So, Olivia, how many do we expect for this course?
Let me check.
Because
Yeah.
sometimes we need not to be selfish.
We are expecting around 70.
70 for PFM.
Yes. Yes. 69.
For PFM.
Yes.
Normally, even in previous classes, there were very few, but it's okay. We can start.
So let us start. Maybe they will call their neighbors to join.
Okay. Let me now share my screen.
Maybe you can start from the tips, like the tips for exam, while we are waiting other students to join.
Thank you. I'm sharing my screen now. I'm trying to share my screen. Okay. So are you able to see my screen?
Yes.
Yes, it's visible.
Okay. A minute. Okay, this is now our module for public financial management under CAT program. Is there anyone who is doing, maybe before I start, is there anyone who is doing this course for the second time? So I'm assuming that everybody here now is doing it for the first time. So Olivier, are these people allowed to talk?
Yes, they can unmute themselves.
Okay. So anybody, but there's sometimes the students, they just connect and they Honeste, is it your first time to do this course?
Yeah, it is just my first time to do this course.
Okay. Giselle, is it your first time? Is Giselle here? It's not. There's another person called Rwanda. I don't know who is who.
Yes, my microphone was muted. It's my first time.
So next, the first time, Giselle, first time. Another person, Rwanda. Who is Rwanda here?
Hello, Jamari. This is James. I'm not just belonging to CAT. I'm in advanced level, but I find this course very important to me to catch up with strategic corporate finance.
Ah, okay, okay, good, good. So you are not doing the PFM. You have done it before?
No, I started when it was not there, just for.
Are you doing CAT or CPA?
I'm doing a CPA. I'm in advanced level.
Okay. Okay. Thank you. Let's go about this. Good. Now, the public financial management S3.6 is a module covered under the CAT program under stage 3, and it is done. Okay, for those things for the first time, you will do it this end of this month, and this topic, this module itself has 8 units. It is not too big, but it has 80 necessary modules that you need to go through, 8 units. The first one is to first of all understand the PFM framework, how the PFM works, what are the main components that we need to understand under the PFM framework. We shall cover the aspect of planning and budgeting, then taxation and the other source of finance, procurement, how we do procurement, how we do cash management, auditing, estimates, and financial reporting in the public sector. And this, when we'll be covering this under Unit 1, we will be able to go through the meaning of PFM, what is public financial management, how is it defined, and why public sector needs a separate financial management approach. Some of you may have done financial accounting, may have done the preparation of basic accounts. Some of you may have done other types of accounting, but now public financial management is more specific for government institutions. Therefore, we need to understand why public sector needs a distinct or a different, a separate financial management approach, because management of public funds is different from the management of private funds. And in the same context, of course, we'll be able to understand the circumstances under which governments may choose to intervene in the economy. Sometimes the government may intervene in the economy when there is market failure and the government wants to do some, to redress some of the issues that are related to the market. The government may intervene in the economy for the purpose of doing income redistribution. When in terms of taxation, the government may intervene to ensure stabilization and with the political ideology. So under this Unit 1, we'll be able to mainly understand what is PFM and why we need a separate financial management approach in government. We shall cover the circumstances under which government may choose to intervene in the economy, and then we'll close this by giving some tips on how to tackle questions in this Unit 1. Okay. Under Unit number 2, we will be able to categorize government expenditure that the government is incurring, as well as government incomes. Under government expenditure, we will be able to understand the multiple objectives and the public services, as well as the intervention of government in the economy. We understand several expenditure that the government incurs for the sake of running the normal operations of the government. This will include the general public service, the payment for defense, the payment that the government makes to ensure public order and safety, the expenses that the government pays for economic affairs, protection of environment, housing and community amenities like construction of health facilities, construction of schools, recreation activities, social protection, among others. And we will be able to link this coverage. Okay, we will need to link it with Unit number 3, which is about the taxation and other sources of finance, because as we speak, the government incomes will also be able to understand government expenditure. Yes?
Can you please share?
Oh, you are not seeing my screen?
Yes.
Oh my God, I thought it was shared. Are you seeing it now?
Yes,
Yes.
I can see it.
Thank
So
you.
I was describing Unit 1, and this is what I've said, the meaning of PFM and why the public sector needs a separate financial management approach. I said also the circumstances under which the government may intervene. I was also discussing the nature and categories of government expenditure as well as government income, which we link with Unit number 3, because Unit number 3 provides taxation and other source of finance. We will also cover some economic policies as well as their impacts on public financial management. We will understand what is a monetary policy, what is the fiscal policy, and what is supply and demand aspect. In particular, we will need to emphasize on the PFM cycle, because for the sake of the exam, as a CAT student, you will need to understand what is a PFM cycle and how the PFM cycle can be applied to your organization. We'll highlight the starting point of the PFM cycle, which start with the identification of national priorities. Then from the national priorities that are understood from different government policies, like the Vision 2050, Vision 2020, the NST1, or the 7 years government program. This is the national priorities. That's how we source the national priorities. And we will understand how the national priorities are translated into national medium-term expenditure framework. National medium-term expenditure framework. And then how this national medium-term expenditure framework, they get translated into national budget. We prepare a national budget from the national medium-term expenditure framework. From there, if the national budget is prepared, it is prepared at institutional level, and every institution will provide its input. It goes to the respective line ministry. Then from the line ministry, the Minister of Finance and Economic Planning will prepare a finance law. The finance law will go through the approval process. It will be presented to cabinet for review and approval, and then it will go to the parliament for voting and approval. Once it is voted and approved, the next step will be to execute the approved budget. And then when the budget is being executed, each public institution needs to ensure that the public funds are in safe hands. Public funds are not misused nor misappropriated. At the end of the day, they will do the accounting and monitoring throughout, so that at the end of the period, they will do their final report and then audit. The report will be done by every specific institution, and they will be sent to the Minister of Finance and Economic Planning, who will consolidate the financial report and send it to the Office of Auditor General. The Office of Auditor General will now start the auditing process. They will audit all public institutions to ensure that there is value for money, to ensure that there is compliance with rules and regulations, to ensure that the financial reports are prepared in accordance with international standards. And he will issue the report, and his audit report will be presented to the parliament as the ones who have voted the budget. Then a copy will go to the President of the Republic, and then once the parliamentarians receive the report, they may call upon the heads of public institutions to come and give explanation on some cases where there is maybe some misappropriation, some misuse, or other aspects of the government money. And then on the basis of the reports that provided the Auditor General, it will form the basis for updating or again planning from the national priorities. And the cycle continues like that, from national priorities, medium-term financial framework, national budget, a finance law, approval by the parliament, budget execution by the institutions, accounting and monitoring to ensure that everything is properly recorded, reporting at the end of the year, doing the audit by the Auditor General, follow-up by the Public Account Committee of the Parliament, and then the cycle continues like that, like that. That's what you call the PFM cycle. And maybe we'll discuss much details on this, but expect that the examiner may ask you to discuss the stages under the PFM cycle. The examiner may ask you this, to describe them. And then you will add the explanation on how this PFM cycle can be applied to your respective institution. So we'll go into details. These are the components that you can still read. So you might expect an open question that will require you to discuss the PFM cycle or some elements and steps and how it may be applied to a public entity of your choice. And also expect some multiple choice question on this. Is that okay with you?
Yes, sir. Okay,
So,
now.
once we complete all those aspects in Unit 1, we will embark on Unit 2. Unit 2 will cover planning and budgeting. And at this unit, we will understand what is the medium-term expenditure framework. This overcomes the weakness of annual budget, which is short-sighted, while many public sector programs cover several years. Now, the MTF provides the linkage between long-term policies or strategies and short-term annual budget. For the sake of the exam, you may expect the examiner to ask you, why is it necessary to use the medium? Why do you think adoption of medium-term expenditure framework was necessary? Yes, it was necessary because the use of annual budget is short-sighted because budget covers 1 year, and most of the projects in the government they close several financial years. Therefore, it was very difficult to use the annual budget. Okay. That's why the use of medium-term expenditure framework was very important. It was very important because the medium-term expenditure framework covers a period of 3 to 4 years, and it closes more than 1 budget year. Okay, so the use of MTF is better than the use of budget. Okay, so you see, for example, here the MTF for 2019-2022 is it covers the three budgets, and the one for 2021-24 it covers also the 3 budgets. If there is a road construction, it is planned for 3 years. It will be in this MTF of 2019-2022, and we will implement several components on every year. Here again, we shall understand the budget cycle. The budget cycle, which starts from planning, budget formulation. After doing the planning, the budget is approved. You go for budget execution, and then budget reporting or evaluation. So under this unit, we shall also understand the details for this budget cycle. These are the key part. For the sake of the exam focus, you should not confuse the PFM cycle and the budget cycle. If the examiner asks you to describe the PFM cycle, you will discuss the PFM stages, starting from national priorities. Okay, national priorities. You go to medium-term expenditure framework. You go to budget, finance law, then budget execution, accounting and monitoring, then reporting and audit. Then you explain those stages. If it asks you the budget cycle, it is a subcomponent of PFM cycle. Budget cycle is a subcomponent of budget cycle where we prepare the agency budget, and those are the budget cycle will include planning, approval, execution, and reporting. Even in multiple choice question of section A, the examiner may ask you to arrange these budget cycle stages. Okay, you need to understand properly the timings of various stages of budget cycle in Rwanda. You need to know when did we do that, and you can check in your material. You can check in your study text on page 23, where you will see how the different timelines on when the budget is prepared, when the budget starts to be implemented, when a fiscal year is completed. Okay. Here, when we talk of the agency, we mean a public institution which is allocated a budget. We shall also cover here the budget approaches. The examiner expects you to understand the advantages of each budget approach and the limitation of different budget approach. So you need to understand the monitoring, how the agency need to prepare budget execution report to compare with the actual results, and make sure you do the analysis of variance. If they bring any question for calculations, please, they may ask you to prepare a cash budget, for example. So before attempting to answer that question, make sure that you see the period where it relates, because some of the incomes may be accrued, some of the expenses may be prepaid or accrued. Therefore, you should check clearly the periods that you are given. You might also expect a discussion question on the application of different budgeting approach. Okay. I'm trying to summarize what is there, but in the next 2 hours, we'll just highlight some key concepts for the sake of the exam. In unit number 3, what you are expected to know is taxation and other source of finance. Here, you will need specifically to know the meaning of tax, the tax base, and the difference between a tax base and a tax rate, the factors that you will consider in determining whether the tax system is suitable. The examiner likes this question, the suitability of tax, where we say that any tax system to be efficient or to operate effectively, it must ensure equity, whereby people having the same source, the same level of income must be taxed equally, or people with different levels of income must be taxed differently. Again, there will be efficiency. Efficiency meaning that in case there is a tax system in a given country, it must be efficient. Efficient means what? It means that the cost of collecting tax should be less than the tax itself that we generate as an income. There should be easy of administration and predictability for a tax system to be suitable for a government. And the ease of administration, we should eliminate the cumbersome process. That's what you see the government of Rwanda is doing, trying to automate, to bring in a digital solution or technology to ensure that we can easily administer and collect taxes. Of course, national planning is very key, and national statistics is very key to ensure there is predictability in the expected revenue from taxation. As far as taxation is concerned, there are some practices that will lead to reduction of taxes. Some of them are acceptable or legal, permissible. Others are unacceptable, illegal, or not permissible. Which means, as a CAT student, you need to know the concept of tax avoidance and tax evasion for the sake of the exam. They are very crucial, and how you can work as the revenue authority to avoid this, which means tax avoidance being the use of accounting knowledge, the use of accounting skills by a specific entity with the aim of reducing the tax liability. The concept of tax avoidance, using your accounting knowledge to reduce the tax liability. On the other side, tax evasion is the fact of trying to evade the tax using some illegal or malpractice, like forging the invoices, not giving the invoice using EBM. These are or underestimating the incomes, overestimating expenses. These are the kind of malpractice under tax evasion. So in other words, tax evasion is not acceptable, it is illegal, because this involves falsification of documents to reduce the tax payable. Whereas tax avoidance is acceptable, it is the use of your accounting knowledge, or even benefiting from the loopholes that exist in the tax system. We will also understand other sources of revenues where the government may raise money to finance its expenditure, like the charges that the government collects through services, the service, or the grants that we can receive from other institutions, the aids, the donor aids that we may get from well-wishers and the other funders. In the exam, you need to expect some multiple choice questions on taxation, like the types of tax, the proportionate tax, the progressive tax. So you need to expect some multiple choice questions on taxation, and as well as some scenario questions. They may even ask you to discuss and explain different tax bases and tax structure that the government may adopt in a specific scenario. Once you complete this, we will go through shortly the Unit 4 of procurement, which focuses on procurement and explains some key elements of the procurement process, and recognizing that procurement is a key component of the PFM cycle. You, as the CAT students, you need to know at least the key stages involved in the procurement process. The examiner may ask you to discuss the 10 key stages that are involved in the procurement process, and they are well written in your textbook. Okay? Key stages involved in the procurement process. Need to take note of them. Then, since the procurement process specifies where to get the goods, you as a CIT student, you are required to understand the key concepts of sourcing and supply chain. What is the sourcing? What is supply chain? So there may be maybe a scenario question where you can discuss various components of supply chain and you apply them to a specific scenario. This question may be there. More specifically, you need to understand the emerging trend under the procurement, and more particularly the e-procurement aspect. The examiner may ask you about e-procurement and be able, and you need to be able to explain the importance of e-procurement. Why should we adopt e-procurement in government? What are the benefits of e-procurement? And of course, what are the challenges? Because for e-procurement, there are some challenges. We don't have, some of us don't have adequate infrastructure. There may be employee resistance to e-procurement and other aspects of e-procurement in Rwanda. You need to know the name of the e-procurement system. In Rwanda, we call it Umucho, because the examiner may ask you this in the multiple choice questions. Any questions so far? Because this is a half of the coverage. Any question?
No query, we can move ahead.
Under unit number 5, we recover the principles of treasury management, cash flow forecasting. Then under this, I expect you to prepare the cash budget. While preparing this in an exam, you need again to check the timing for cash receipts and payment, okay? This kind of controls should be put in place since cash resources is used with high risk to be stolen, misused, and so forth. So in summary, under cash management, the key component here is the preparation of the cash flow plan or the cash budget. Expect a question on a cash flow plan. Maybe we'll be able to attempt one question on this. And in the last 2 topics, auditing is one of them. You need to understand types of auditing under the public financial management, which may be internal auditing, external auditing, and supreme audit. Internal auditing is done by the internal auditor who is within the organization. External is done by the outside the auditor. Then the supreme audit is done by the Office of Auditor General, because that is the supreme audit institution, the SI. Okay, so you need to just have a quick glance, and could they on some of the international standard of supreme audit, the standards that are used by the Office of Auditor General. So a clear distinction between internal and external audit is very necessary. So we will go into details maybe after this. I was just giving you a hint. IFMIS is one of the topics that you will need to know, and some reforms that have taken place recently. In an exam context, they may ask you the advantages, the benefits, and drawbacks of IFMIS. In the last topic, you need to understand the difference between cash and accrual basis. Then they modify the cash basis. How is it done in government institutions? You may expect the examiner to ask you a question to describe what do you think will be the likely changes if the government now is moving from modified cash basis to full accrual basis. You need to understand the difference between the cash basis of accounting and accrual basis of accounting. The way you know it from the financial accounting perspective, you need to modify a bit and incorporate some other key aspects of the government. Mainly, these are the 8 topics that we need to understand, but I will focus more on where you have issues. If it's for your first time to do the exam, this exam is a bit different from others because there are some other papers in level 1 and level 2 where we need to do multiple choice questions, 50 questions. But this one is different. At stage 3, it is different. Okay, because we have 3 sections, section A and section B and section C. And section A, we only have 10 multiple choice questions. Whereas section B, we have 2 questions, each question having 10 marks. Section C, 3 questions, each question having 20 marks. Section C is very important. All questions in the CAT exam are compulsory. Okay. I think all other instructions, you will get them from the exam. I think for us, we can conclude the introductory part by here, and then we embark on the specific topic. Is there any questions so far?
No question.
Even that child doesn't have a question. Umwana nta kibazo afite.
The baby doesn't have a problem.
No problem. Good.
Yeah.
I'm now sharing the notes. Let me share my screen once again. Are you able to see the screen?
Yes.
This is the instructor teaching materials for CAT. So at the end of this lesson, I will be able to share with you these notes if you want them. But I think you have the book. Don't you have the book? You need go.
Yes,
Yeah.
is
Um,
necessary.
Necessary.
Some of us don't have books.
Mukiga mute. Niga mute nta bitabo.
It's a sink and a sink or swim.
You sink or swim? What did you select? Which option did you select? Swimming or sinking?
I think it can.
Nta bitabo mufite bya PFM?
Genda gifite.
Maybe for me, because I'm in advanced level CPA and I don't have such a option to have just books of CAT. Maybe I will benefit from this session.
Okay. In this, yes, we mentioned on public financial management, PFM. I share with you some questions and answers that you can use. Yeah, some review questions that I've compiled. Some review questions and some proposed answers that I worked on, and then you will be able to check. What is under unit 1, public financial management, or PFM, public sector, public expenditure, economic policy, PFM cycle, and then we shall have some end of unity questions. Okay. Now, the topics that I will help you to go through for the sake of revision, we are expecting more questions for the exam. It's Unit 1, Unit 2, Unit 3, 4, and 5. So 6, 7, and 8. These are more word information. You can be able to manage them and answer the questions from them. Okay, under lesson 1, we were trying to understand what is the public sector. This one, you know, public sector, it is the economy has 2 parts, has 2 sectors, public sector and private sector. The public sector is that part of economy that is controlled by government, and this comprises of various organizations, ministries, and departments. Okay, and the purpose and the nature of the public sector with its unique characteristics, and it is useful to understand the features of the public sector before moving on to explore how finances of the public sector are managed. So that part of the economy, it is controlled by the government. That's what we call public sector. Kandi public sector ikenera specific management. Why? Because the public sector is different from the private sector. Because in the public sector, we have public accountability, where all government officials, they are elected by people, and they use monies from the citizens. So we need to ensure public accountability. Accountability ni ukuryozwa, ni ukumva yuko ugomba kuryozwa ibya rubanda wahawe gukoresha, wabikoresha nawe ukabiryozwa. So the government sector or public sector is different from the private sector in the sense that public accountability is very important. Government has several rights and responsibilities to affect the economy. And again, we need to differentiate public sector from private sector, because public sector has the hierarchy of ownership, because public sector entities do not act to enhance the economic position of the entity for the benefit of the owner, like in the private sector. So it is the benefit of the general public. Ikindi nuko public sector operates within financial framework, ishyirwaho na registration. When we talk of the legislation or the legislature, we mean the parliament. Tuvuze inteko ishinga amategeko. Registration here, not registration, legislation, legislature. Okay, legislature. That is registration. If you find it in an exam, they mean parliament. Okay, parliament, deputies, and senate. Okay. Again, we need specific finance management approach in the public, because all the sources owned by the government, they are there for service provision rather than for generating profit. Okay. Again, we need specific or separate financial management approach in the government institution, because government is involved in more transactions that have no exchanges. Non-exchange transaction. Tax has no feedback. There is no quid pro quo for taxes. Okay. Social benefits, fines, So government is involved in non-exchange transaction because normally for exchange transaction, one party receives some value and to give something in return. But for the government makes expenditure, but they don't expect anything in return except the people satisfaction. Okay? So we will be able to, these other parts, they are okay, but I wanted us to cover, to first understand what is very important. What is very important in this course is to understand. It is to understand the why we need the government, why do we need the specific or separate financial management approach in government institution. We need it, yes, we need it because the financial management in the public sector is different from the financial management in the private sector. Is that understandable?
Yes.
Again, for the sake of the exam, economic interventions are very important. Mu kizamini, nta kizamini cya PFM bazakubaza, uretse kuzasanga bakubajije is economic interventions. Ugombye kuba uzumva neza, udashakisha. Ni ryari leta ishobora kuinterveninga muri economy, yinterveninga mu byagenze gutwenda bisobanura ugatanga n'ingero. There are circumstances when government may choose to intervene in their country's economy. There are a number of arguments that justify such government intervention. The government may intervene in the economy when there is market failure, when it needs income redistribution, when it needs to stabilize the economy, when it needs to advance the political ideology. Now, a market failure, it is where the operation of markets distorts economic outcome, hereby justifying government intervention to improve the situation. These are important concepts, and there are many types of market failure. So we will be able to identify different market failure. For example, currently we have the market failure on the prices of fuel. The forces of supply and demand in Rwanda have failed to regulate the price of fuel. The price of fuel is increasing, and it is affecting everybody who is using an automobile. It is affecting our motor. It is affecting our chauffeur. It is affecting truck drivers. It is affecting business people. So there is a market failure, price increase. Abahinzi b'ibirayi, there is a market failure because the supply and demand have failed to match themselves and regulate the prices. Therefore, the government will intervene to regulate the forces of supply and demand. Ikaba yatanga subsidies, ikaba yashyiraho ibiciro ntarengwa by'ibirayi, ibiciro ntarengwa by'amata, ibiciro ntarengwa bya essence, ibiciro ntarengwa by'ibindi byose bibona bifite effect ku buzima bw'abanyagihugu. The government will intervene in case there is a market failure. Okay? And then redistribution. The government may intervene in the economy to ensure income redistribution. And most of the time, the government intervenes by charging taxes, because taxation is just income redistribution, taking the money from high income earners and redistribute it so that it can also reach the low income earners or non-earning people. Income redistribution. If the government sits there and it does not intervene to regulate taxation, abakire bakomeza bagakira uko bishakiye n'abakene bagakena cyane. But the government intervene to change some tax bases, ikavuga ngo umuntu uhembwa umushahara wa 60 ntazasora, ariko uhembwa umushahara w'ibihumbi 100 kuzamura kuri 300 azasora kuri 20%. N'urengeje kuri 300 kuzamuka wazasora 3%. So there is that income redistribution to ensure equity among people. That's when the government may intervene to redistribute income among the citizens. Number 3, the government may intervene for stabilization of economy. Okay? Are we together?
Yes, sir.
Yes.
Okay. For stabilization of the economy, and it may put in place some controls to try to steady the country's economic during unusual times. When, for example, there is a financial crisis. For example, we had a financial crisis back in the years in 2007 and 2008. There was economic crisis. The government should intervene by putting in place some economic policies, either by reducing salaries, increasing salaries, or even setting some minimum wage to protect low-income earners. I have seen in Rwanda, they have recently adopted a law fixing the minimum wages. Okay, that is an intervention for economic stabilization, where the government may have indirect as well as direct measures. Okay. For income redistribution and for economic stabilization, they go together. More specifically for taxation, that is redistribution. But putting in place some other policies, like policies on interest rate, bakajya kuri bank bakababwira ngo interest rate ntirenge 18% kugira ngo abantu babashe kubona amafaranga. Leta ikaba yashyiramo izindi reserve ikazishyira muri economy, so that the banks can get money to issue loans to business people, and then they are trying to stabilize the economy. Okay. Or they may extend some subsidies or social benefit programs. Okay. That is the intervention in the economy. Lastly, the government may intervene in the economy through political ideology. Basically means giving ideas by the government, where the government may have some ideas that the private sector profit motives will inherently achieve greater efficiency, and therefore they can embark on privatization. Okay, where they may say that some even private sector management principles can be used in public service provision. Okay, to include the private sector delivering public service on behalf of the state. For example, when you go for privatization, that's the political ideology. Leta ikabona itabasha kujera ikigo nka WASAC, ariko ikavuga iti turagishyira hariya tugihe private concern kuyagicuruza, ariko kubera ko tuzi effect icuruzwa ry'amazi ryagira ku banyarwanda, kizanagoza kigira ubuyobozi bwite bwa leta. So the WASAC can have some private wings, but also it has a government wing whereby the government will intervene to make sure that the prices are fixed in consultation with government officials. Okay. Again, some examples will include the national train service or provision of utilities. This one I've discussed, privatization. So in short, when you are preparing for the exam, the examiner will ask you a question on how to apply to interpret some government intervention. They can give you a scenario. They say, recently the government of Rwanda has intervened in the fixation of prices for the fuel. Which kind of economic intervention is that? You may say that is market failure. That is economic stabilization. If they say, for example, the force of supply and demand have failed to regulate the prices, so that will be an example of the market failure that you need to address. Okay. Then there are some functions that we know for another multiple choice questions. You need to take note that the examiner may ask you the role of some units, more specifically in the Ministry of Finance and Economic Planning. We have a specific unit called macroeconomic policy unit. All these policies we are discussing, everything that we are discussing, okay? The macroeconomic policy unit in the Minecofin is the one to handle all these issues. And their main function will include macroeconomic management, public debt policy, tax policy, management of regional economic integration, relations with international financial institutions, and others. Okay. So when we were discussing the economic interventions, we discussed the market failure. And when we talk of the market failure, we are just explaining in details. When we talk of the market failure and the government will need to intervene to address the market failure, what do we mean by market failure? The market failure, as we mentioned above, it means the operation of the markets that distort the economic outcome. Aho ibintu biba bitagenda neza, ibiciro ku masoko bitameze neza, cyangwa se products ziri gushyirwa ku isoko zishobora kugira ingaruka ku buzima bw'abantu. Therefore, to improve efficiency, the government will intervene to redress several market failures. There may be some market failures in public goods. There may be market failures under merit and demerit goods, market failures under some other externalities, market power, factor mobility, information asymmetry. When we talk of the market failure in this perspective, we say that I want you to take this. Mukabyumva ukamenya ko ikibazo bakikwaje wagisubiza. Iyo usobanura market failure, ushobora kuvuga uti the market failure, it is a situation, or it is an event or a situation where there are some operations taking place in the market, and therefore they distort the economic outcomes, which is normally should have been addressed by the force of supply and demand. Ariko ntibyakunze kwiregulatinga, none bituma haba leta ibona ko market failure ishobora kuintervening. Ibyo bishobora kubaho kuri public goods. Public goods ni goods that have a specific meaning. Okay? Public goods or services ni goods abantu badakwiriye kujyaho impaka. So there is no competition. Like for example, the air, the clean air, having a clean air, there is no competition. Nobody is excluded from this. National defense, ingabo z'igihugu iyo zirize umutekano ziba ziwurindiye twese nk'abanyagihugu. Government bigomba kwishyura kugira ngo imaking sure yuko iyo public goods ifite ibyo igomba kuba ifite byose. Okay? When we talk of this national defense, national electrification, amatara yo ku mihanda acanira buri umwe wese. Nta muntu waca ku itara ryo ku muhanda kuko atishyuye umusoro ngo rihere ko rizima. So it is now a public good or a public service. Ntabwo itara ryakubona ngo umenye kutishyuye umusoro rihere ko rizima. So there is non-excludability, which is often given rise to free riding, whereby consumers do not pay for the provision of the service. Okay? And therefore, the government will intervene in the provision of public goods, and it should be the one regulating the prices of offering these public goods. If the free riding occurs, the revenue to those supplying these goods is less than society as a whole is willing to pay collectively, and exclusively market-based provision would therefore lead to too few public goods being produced. Okay, the public goods, the national defense, it needs to intervene to regulate the national defense budget, and nobody should be knowing this. So it should be the discretion of the Ministry of Defense. So when there is a market failure in the public goods, the government should intervene immediately to make sure that it safeguards the provision of public goods. Okay? Amatara yo ku mihanda, ibindi byose leta ni igomba kubyishyiramo budget kuko ntawe yabwira kujya kubikora, ntawabikora, buri wese yakumva bitamureba. So the government needs to intervene. Ikindi, government need to intervene igihe habayeho market failure muri merit and demerit goods. Merit goods ni ibicuruzwa biri very positive aba consumers bose bakeneye. Hanyuma demerit goods ni ibindi bicuruzwa byose bishobora kugaragara yuko biri harmful ku buzima bw'abantu nk'itabi, biri harmful. Leta rero igomba kwinterveninga in the market for the market failure, because there will be a market failure for merit and demerit goods. Okay, for the merit goods, the government should make sure that consumers of merit goods are there and they are not disadvantaged. Okay, they should be given information. Leta igomba kwinterveninga muri economy ikamenya yuko umuntu wese ukora itabi yandikaho ko riri harmful. That is intervention in the market failure for the sake of the merit goods. The merit goods. Government may provide or encourage the supply and consumption of merit goods. Nk'amata, abantu bakwiriye kunywa amata. Leta y'u Rwanda yirwamamaza ngo abantu bakwiriye kurya amagi kuko that is merit goods. Ndetse ikanaregulatinga aborozi b'inkoko, inkoko zigahabwa ubwishingizi kugira ngo amagi aboneke ari menshi abantu bayarye. The merit goods bakirwa babwira abantu ngo itabi ni ribi nubwo urinywa ni ribi nubwo gisha umusoro ni ribi bakabyandikaho. The government is intervening for the market failure of merit and the merit goods. Okay, are we still together? Is it understandable?
Yes, you are together.
Yes.
The government may respond to merit goods and services to ensure. In short, when it comes to regulating the market failure, in case of the merit and demerit goods, the government will respond to merit goods and services so that the government can ensure that they are sufficiently produced. Okay? And then the government may incur some public expenditure in order to discourage the production and consumption of demerit goods. For example, we have expenditure on health campaigns that are warning people of the harmful effects of smoking cigarettes. Leta irashora amafaranga menshi ishyira ibyapa ku muhanda ibuza abantu kunywa itabi. Leta irashora amafaranga menshi mu kubaka ibigo nderabuzima. Iyo ni merit goods. Hanyuma ibyapa bibuza itabi. That is the merit goods and market failure. Externalities. There may be also market failure in terms of externalities, where when activities produces cost and benefit that are not directly into the market. So the price mechanism may not function properly. Okay? Because when you are producing, abantu bakavuga ngo ngiye nkora business yo kwikorera amashashi, hey, the government need to intervene. Ikavuga ngo hoya amashashi ariko nubwo ufite uruganda rw'amashashi utanga n'imisoro, ariko aya mashashi najya mu butaka azatuma haba ubutaka bwangirika, hanyuma ubuhinzi bwacu be affected. Leta intervening ikavuga ati duciye amashashi. The government, such as the environmental impact of pollution, which is not always captured by the cost borne by the producing or consuming goods. In the presence of such externalities, companies may reduce their own cost by not investing in pollution reduction caused by the activities. And this will include the cost for other companies and households. So if there are negative externalities, but there may be also some positive externalities like research and development that the government is advocating for. In this case, a company may not gain the full economic benefit. This market failure normally leads to public expenditure. Kubera yuko government is intervening kugira ngo ishyireho amategeko n'amabwiriza abuza ihumanya ry'ikirere, kwangiza ubutaka n'ibindi. Wowe niba wari ufite uruganda rwawe, nubwo ufite uruganda rukora neza, barakubwira bati uruganda koresha nyiramugengeri, ureke kuguma guhumanya ikirere. Government intervening kugira ngo igwanye externalities, ibindi bintu bishobora kwangiza ubuzima bw'abantu nubwo byo bicontributinga kuri economy. Izi ni intervention nyinshi government igomba kujyamo kugira ngo iregulating ibibera muri economy. Market power. Market power, abantu bashobora kwikubira isoko leta ikajyamo to make sure that there is efficient markets. Some people may establish barriers to entry in the market, bagashyiramo high cost, creating monopolies that lead to organization having too much market power to enable competition and pricing decisions that are relevant from a societal perspective. This monopoly power, the monopoly power may affect the customers. Therefore, government ishobora intervening ahangaha kugira ngo protecting consumers. Okay? Ikagenda ireba abantu bafite ibikampani binini bashaka ko overcharging aba customers babo, ikongera rate y'imisoro, ikongera amafaranga bishyuraga kuri service zitandukanye kugira ngo ibashe gukorektinga, kugira ngo ibashe gukorektinga amafaranga yakoresha muri economy. Okay, so the government may incur then public expenditure in relation to this market failure in attempt to protect the consumers. That's what I was saying. Okay. Hanyuma akanyuma ni factor immobility. Factor immobility ni uko ushobora gusanga abantu bamwe bari abantu benshi bari concentrated ahantu hamwe, abantu benshi bibera i Kigali, kuko udashobora kuba wajya mu yindi migi yo mu Rwanda ngo usangemo abantu bakora ibintu runaka. So you see that people are skilled and experienced and they are just in one area. So ugasanga abantu bari unemployed bose bibera i Kigali kandi baramutse bagiye i Nyamagabe bakora. Okay, that's what we call geographical immobility. Okay, so the government may intervene in the economy to put in place policies that allow factor mobility. Some factors, they move from one area to another area. Ugasanga niho bagiye bashyira uduciro dutandukanye, bagashyira agaciro za Rwamagana, bagashyira mu ntara, bagakora industrial parks mu turere dutandukanye, bagateza imbere indi migi bakayita secondary cities kugira ngo abantu naho nyine bamuvinge. That is also the government intervention to ensure factor mobility, occupational mobility, as well as geographical mobility. The government may incur expenditure to target those areas of market failures, such as to provide retraining opportunities or subsidizing relocations. Umuntu wemeye kujya gukorera Rusizi bakamworohereza kuvuga ati urasora amafaranga make. N'urugero akavuga ati abantu bazakorera muri aka karere bati imisoro yabo izaba ari umuntu uzaza gushyira uruganda muri economic zone azamara imyaka 5 atishyura imisoro. Umuntu uzajyana uruganda rwe muri industrial park y'u Bugesera azamara imyaka 2 atishyura imisoro. To allow factor mobility. This market failure of factor immobility calls for government intervention. Okay? Is that okay for everyone?
Okay.
Another market failure is information asymmetry. The information asymmetry basically occurs where the buyers and sellers in the market do not have the same information. Sanga abantu nta makuru bafite. Niyo mpamvu ujya ubona leta yashyizeho forum zitandukanye izo bita isoko murayizi? Software yitwa isoko. Ntayo muzi? Isoko ni platform ushobora kujya kubona ibiciro by'ibicuruzwa bitandukanye mu Rwanda. Uzandikemo ngo isoko ni udu platform umuntu ushobora kuboneraho ibiciro. Abaguzi n'abacuruzi bakaboneraho bagahanahanaho amakuru. Government rero naho ishobora kwinterveninga through regulation and enforcement of information provision. Hari n'ukuntu abacuruzi badubeshya ugasanga ntabwo bapublishinga maybe information z'ibicuruzwa byabo ngo bandikeho babisobanure. Leta rero ikinterveninga babwira ngo mujye mureboringa ibyo mukora mushireho amazina. Icyanyuma ni market volatility. Hariho fluctuation y'ibiciro. Fluctuation y'ibiciro ugasanga abahinzi b'ibirayi abahinzi b'ibirayi umucuruzi arashaka kubunamaho akagenda akajya kubagurira ibirayi bikiri mu murima, leta ikavuga ngo ahantu hamwe hagurishirizwa ibirayi ni ku giti cy'inyoni, for example ibirayi bivuye mu majyaruguru byose bigurishwa ku giti cy'inyoni. So for example in agriculture a long term income falls and farmers lose bargaining power to sell their product. The government may intervene by subsidizing farmers or even implementing a minimum price to be paid to farmers for particular products such as milk, potatoes, and others. Igiciro cy'ibirayi kuvuga ngo ntikijya munsi ya 400 kugira ngo umuhinzi abe protected, ariko kugira ngo n'umukonsoma abe protected bakavuga ngo ntikirenga 500, ni hagati ya 400 na 500. Umuhinzi akaba yizeye yuko ntawe uzamuha munsi ya 400, ariko nawe akaba azi ko atazacuruza hejuru ya 500. Bargaining ikabamo aho ngaho hagati. That is what you call excessive market volatility. Ibyo ntimwabyumvise ra? Yumvikanye?
Yes. I am not hearing you. mwe muri kumva lecturer njye ntabwo ndi kumwumva.
wabyagiye sinzi yari ari kumanza ahari aje.
Okay, nizana ikibazo cyanjye.
Sorry, I was muted. Somebody called me and I couldn't miss the call. So I apologize for that. So you were not hearing me,
Wait,
but I was also not speaking. But we can continue.
Yes.
Okay, for now, for the public expenditure, I will not spend time on this. This one you can read, okay? Can read and understand the public expenditure, general public, defense, blah, blah, blah. You will read this and understand them, okay? But I can discuss with you the economic policies. The economic policies that you need to know for the sake of the exam. We have mainly two policies, okay? Two policies. We have the monetary policy. The monetary policy, it is a policy regulated by the central bank, okay? Giselle, do you have any question? I have seen Giselle is raising up a hand.
No, I have no question. It was by default, by mistake.
Okay, thank you. Okay, now for the economic policy, we have the monetary policy, which is the action that the country's central bank or government take to influence how much money is in the economy and how much it costs to borrow. So a monetary policy, it is how the central bank regulates the supply of money in the economy. That one you need to know. Then the main objective of our central bank, it is to ensure, remember, for the sake of multiple choice questions, the examiner may ask you the objective of the central bank. They ask you, the following are the objective of the central bank, except, so you need to know that the central bank or BNL ensure and maintain price stability. It enhance and maintain a stable and competitive financial system. It supports the government general economic policies. So you need to know these three main objectives of the central bank in relation to monetary policy. Of course, BNL has other roles and objectives, but in relation to monetary policy that we are discussing here, it ensures price stability, stable and competitive financial system, and general economic policies. And this is done through the Monetary Policy Committee. They have a specific committee. This committee is the one in charge of regulating the monetary policy. Okay? And now, when this committee is advising on regulation of monetary policy, they have some tools they use. They use three key instruments. They can use open market operation, they can use reserve requirements, they can use foreign exchange interventions. Okay? So these three tools, when you talk of open market policy, ni igihe BNL yinterveninga nayo muri economy, ni policy BNL ishyiraho ikaba yakongera amafaranga muri economy cyangwa se ikayavanamo bitewe n'ibikenewe. Urugero nk'ubu nyuma ya COVID bashize bonds, government bonds on the market so that they can get money, open market operation. They can mop up or inject liquidity in the banking system to keep the reserve money as desired. Muri COVID, BNL yahaye commercial bank amafaranga inagabanya reserves bari bafite muri BNL kugira ngo babashe kubona amafaranga baguriza abantu. Iyo ni open market. Or change the reserve requirements. Okay, these also affect the liquidity in the banking system. Buri banki yose mu Rwanda mu gihugu ibigomba kugira reserve ibika kuri BNL. So BNL rero iyo yenda yanalize uko ubukungu buhagaze ishobora kongera reserve ikabwira amabanki ngo niba umuntu yari afitemo reserve za miliyari 50 agomba reserve za miliyari 70. Icyo gihe babonye amafaranga ari gusigikira ari menshi muri economy bagira ngo bayagabanyemo kugira ngo banki zisigare amafaranga makeya yo gutangamo inguzanyo. Kimwe ngo bashobora kubona bakabona banks abantu bakeneye amafaranga ni benshi kugira ngo bakore cyane, business activities ziyongereye, commercial banks bakazibwe zikavuga ati okay, noneho reserve za miliyoni 50 no turasaba ko buri banki nibura ifite reserve za miliyari 30 bakazigabanya, noneho basha kubona amafaranga zikoresha muri economy zitanga loans ku bakiriya. Ikindi nuko bashobora gushyiraho foreign exchange intervention to defend the exchange rate kugira ngo abashe kwiyongera agaciro k'ifaranga versus the international currency. Therefore, monetary policy, as we discuss here, it is the action that the central bank of the government will take to influence the supply of money in the economy and be able to know how much it costs to borrow. Ubu interest rate ya 18% amabanki aduca cyangwa 16 bitewe n'ubwoko bwa loan igenwa na central bank bitewe n'uko yabonye ubukungu buhagaze. These are several policies that the government would put in place. Okay? There's also fiscal policy. A fiscal policy, it is also a policy now the government use of government expenditure and revenue collection. Fiscal policy, it is in relation to taxes. It is how the government regulates its taxes and its spending. For example, where the government could try to increase the disposable income. Nk'ibyo bakoze ejo bundi. Mwabonye ko bagabanyije umusoro. Mwabibonye. That's the fiscal policy. Have you seen that? Bagabanyije umusoro ku bihembo.
Yes.
That is through a fiscal policy. Mu kizami rero, for the sake of the exam, urabona ko dufite komite ebyiri. Abantu benshi nyambona muri dufite ikizamini cya PF barazi confusing. Monetary Policy Committee iba muri BNL, ishinzwe kuregulatinga ifaranga. Hanyuma iyitwa Macroeconomic Policy Unity iyo iba muri Minecofin niyo ishinzwe fiscal policy. Iby'imisoro biba regulated muri Minecofin. Hanyuma iby'ifaranga bikaba regulated hehe muri BNL. I hope we are together. Hari ukuntu batanga ikibazo muri multiple choice question bakakubaza responsibilities za macroeconomic policy ukazitiranya na responsibilities za monetary policy committee. Biratandukanye. So the macroeconomic policy unity has the role of macroeconomic management, and in relation to fiscal policy, they analyze the implication of public expenditure and public revenue. Okay? Bagomba kureba amafaranga yinjiye n'ayahe, domestic revenues yinjiye n'izihe, total grants twabonye n'izihe, bakazimenya, bakamenya expenditure, bakamenya financing. So fiscal policy, it is the use of government revenue and expenditure to influence the economy by either increasing the government expenditure or reducing government expenditure. Government expenditure example is salaries. By increasing or reducing salaries, we are just working on a fiscal policy. Okay. The rest of the supply and demand relationship, that one you know. As we are concluding this topic, we discussed over the PFM. What is the PFM? Iki kintu ni cyiza mu kizamini rwose ikibazo cyo kuri PFM ntikikagutsinde. PFM being the effective PFM is very important. Okay? PFM financial management. Aha mu kizamini kigomba kumenyamo ugomba kumenya elements of the PFM cycle. This cycle, national priorities, national MTF, agency budget, finance law. This is law. This is not O. This is A. Finance law. Law. This goes to the parliament to make sure that it is approved by the parliament. Okay. So we have national priorities, national medium-term expenditure framework, agency budget, finance law, execution of budget, accounting and monitoring, reporting and auditing. So do I need to explain this or you have understood it? You want me to repeat it?
Is it clear?
Because everybody needs to know the PFM cycle. The PFM cycle starts with the national priorities, and that is the planning process. That's where we check the key policies and the documentations like Vision 2020. It is done by the National Development Planning Unit. Giselle, do you still have a question? I can see you are raising up your hand. Or it is becoming by error.
I'm sorry.
Okay, it's fine. National priorities, we said where we get them from Vision 2020, EDPRS2, and now it is Vision 2050 and National Strategy for Transformation 1. Okay, NST1. Then these national priorities are converted into medium-term expenditure framework. Iki kintu mukimenye ahantu kuri MTF barahabaza ikibazo cyane. Bahabaza ikibazo cyane. Ikibazo babazaho ni ikihe? Babazaho ikibazo, why do you think MTF is important? MTF is important because it came as a solution to the use of budget, because the budget was short-term in nature, yet most of the government projects are implemented in more than 1 year. Therefore, MTF provides a snapshot of the expenditure that we will incur in a period of 3 to 4 years. Is that clear?
Yes.
Then after the MTF and the agency budget, a finance law will be prepared. Minecofin will prepare an annual budget framework paper and the draft paper, which will be submitted to the cabinet. The cabinet will assess it, and every cabinet member will confirm that his items are well included, and it will go to the parliament for approval. And then the draft finance law and supporting notes will provide a summary. Okay? Then they will issue an organic budget law. Then we start the budget execution. This should be predictable. And then in the budget execution, we start from July and it ends in June. While implementing the budget, we need to make sure that we exercise due diligence by doing accounting and monitoring. They are very important because we need to record everything. At the end of there, you do the reporting, which will be followed by audit. That will be reporting followed by audit by the Office of Auditor General. So I think if you see the summary here, national priorities, the strategic objectives are put in place. MTF is put in place, which is a linkage, a bridge between national priority and the agency budget. The agency budget will be prepared to become a finance law, budget execution, accounting, monitoring, and the others. That is the end of that lesson. Okay? Is that okay?
Yes.
Yes.
Under planning, let me see if we can have some review questions. And that is not running out as insomnia. So I think the review question. Sorry.
Yes.
Do you see this one? All questions are compulsory and must be attempted. There are several arguments that justify government intervention in economies. The following are included in these reasons with the exception of market failure, redistribution, political ideology, monetary policy. What is the correct answer?
D.
The correct answer is
D.
D. Because the reasons are market failure, redistribution, and political ideology.
Yes.
Monetary policy is a policy and it is not an example of government intervention. Is this okay?
Yes.
Question 2. Choose the most accurate statement among the following in relation to public financial management or the PFM cycle. The government, in Uganda, the government national budget runs from 30th June to 1st July. Is this correct?
No.
Budget should be approved by the legislature, which should be able to effectively scrutinize government plan. Annual financial reports should be subject to dependent external audit and scrutiny. There should be no predictability but control in the budget execution. What is the most accurate statement?
B.
B. Annual financial reports will relate to dependent external audit and scrutiny. Is that correct? This should have been independent. Annual financial reports will result to independent external audit. Okay. Anyway, maybe I will share with you some review questions. I have very many review questions. Most of them are the past papers that were done in the previous exams. Do you have past papers? Do you have the past papers?
Yes, we have some.
Like this one of June, sorry, of April 2021. A government classifies expenditure by function. Within which function should the government classify expenditure on prison, public order and safety, economic affairs, general public service, health, none of the above?
Hey,
Public order, of course.
Public order and safety. Okay. I will share with you this with some answers. Okay. Under planning and budgeting, which is unit 2, planning and budgeting, we understand what is budgeting framework, budgeting cycle, roles in budgeting, budget monitoring. So budget framework, we need to understand what is the budget, because budgeting is a fundamental element of PFM and it forms part of a wider planning framework. Okay. Do you know what is a budget normally? Hello? Do you
Hello.
know the meaning of a budget?
yes.
What is a budget? Anyone?
An estimate of revenues, a source of revenues and expenditures within a specified period, specifically 1 year.
Okay. Another one? Any other one? Okay.
What is the question?
I was asking the meaning of a budget, simply.
It's a quantified plan of action of plan for forthcoming period.
Okay. We say normally a budget is a formalized numeric plan of action for an organization. It reflects what the organization wants to achieve in the forthcoming period of financial. It is both a plan and a performance measure. It shows what you have planned and how you will measure it. So we cover various approaches to producing a budget and some parties that are involved in the monitoring. All what you have said is correct, because a budget is a plan of action costed in monetary terms. It is a plan of action, but in addition to that plan, we should say that that plan is costed in monetary terms. Okay? It is costed in monetary terms. Yeah, it is both a plan and a performance measure. Okay, we shall see also approaches to producing a budget and people who are involved. So we discussed of the medium-term expenditure framework, and this medium-term expenditure framework provides a linkage. It provides a linkage between long-term policies or strategies and the short-term annual budget expenditure, with the aim of ensuring that expenditure incurred is on areas to address strategic goals. So we have discussed that one of the criticisms for the annual budget is that it is short-sighted. We have discussed this. While many public sector programs cover several years, therefore, the NTF provides a way of overcoming this weakness. We have discussed it. I've discussed this, and I will not spend much time on this. I will go straight to the budget cycle. This budget cycle, you need to understand the budget cycle, which is an essential part of PFM and describes the process connected with the formulation, approval, execution, and evaluation of the budget. Okay. In the exam, the examiner may ask you to arrange these stages in a logical flow. The examiner may say, the budget cycle is composed of the 4 stages, and they are presented in a sequential order. They say formulation, evaluation, approval, execution. Formulation, approval, evaluation, execution. Formulation, execution, approval, evaluation. D, formulation, approval, execution, evaluation. So they just try to mix the stages. So you need to know how to separate these ones and give explanations. You can explain the budgeting cycle, how it follows, and what do you do in the budget cycle. A budget is formulated based on clear strategies, and you have policies to achieve public service goals. Therefore, the annual budget will be aligned with the medium-term plans, and there is effective participation by stakeholders in the whole process. Okay. When you talk of the budget formulation, we mean we have clear strategy, and we need to support the implementation of policies with the aim of achieving a public service goal. Therefore, the annual budget is aligned with the medium-term plans, and all key stakeholders should be involved in the process. After the formulation of the budget, the next stage will be its approval. The budget will be approved by the parliament. The parliament will scrutinize the government plan to assess whether it falls in the interest of the general public. After assessing this, they will give an approval. The legislature or the parliament will give an approval. The approval by the legislature will follow next. After the approval, then there will be execution. Once the budget is approved, the budget will be executed. Then when with the execution, there is a predictability and control in the budget execution, whereby we have some policies and procedures to be followed while executing the budget. And of course, at the end of the year, we will do the reporting for the sake of evaluating how the budget was used. And the final evaluation of the budget will be based on to formulate the budget for the next fiscal year. That's the summary of the budget cycle. And when you read these ones, you will find everything on how a budget is formulated, based on different strategies, Vision 2050, NST1. Here we are talking of EDPRS2, but you need to know that something have been updated, okay? And you need to know in Rwanda, the government budget starts from 1st July to 30th June. Niya question twasubizaga abavugaga ngo the budget runs from 30th July to 1st June. So you need to know that that was not correct. It runs from 1st July to 30th June, and it reads down from the government planning tools that we know, NST1, Vision 2050, and the others. A budget is approved. How is it approved? It is approved by the parliament or the legislature. We more specifically, the Chamber of Deputies is the one that has the power to approve the annual national budget. Who will present the budget to the parliament for approval? Minecofin, the Minister of Finance, will present the budget to the parliament for approval. Before that, they will take it to the cabinet for review and approval, and then it goes to the parliament. Once it is approved, it will go for execution. It will be executed by different implementing entities. And now, towards the end, there will be evaluation of the budget, whereby annual financial report will be produced and be subject to independent external audit and scrutiny. Then these are the budgeting process, how we do planning. We start the planning in August, September. Then we formulate a budget in October, November, up to February. It is approved around May. Then in the end of June, it will be ready. Then we start its implementation in July. Okay? In an exam, you may expect the examiner to ask you the role of different actors in the budgeting process. Tugomba kumenya akazi ka buri rwego muri budgeting process. Okay. Urugero, nuko tuvuze ngo we have several actors. We have the executive and the legislature. We have the cabinet. We have the Minecofin. We have the Chamber of Deputies. We have Auditor General. We have the finance professionals, policy analysts. We have Public Accounting Committee. We have everything. Okay. So all these people, you need to know their roles. These are actors in the budgeting process. Muza akamaro kabo. Ibi murabizi. For the sake of exam. Role of different actors.
Can you go through quickly?
Quickly. The role of different actors. When we talk of, ubundi se muzi ubwoko bw'ubutegetsi dufite mu Rwanda.
Butatu. Ubwoko bw'ubutegetsi ni butatu.
We have number one.
We have executive, legislative, and judiciary.
And the judicial. Habanza legislature, hakurikiraho executive, hakaza judicial. Legislature ni ubutegetsi nshinga amategeko, nyubahiriza amategeko, hakaza n'ubucamanza. So role rero ya legislature irimo parliament. Parliament, we know the role of deputies. Their role in the budgeting process is the approval of the budget. muri executive harimwo cabinet and ministry of finance and economic planning. Nubwo Minecofin ari part ya cabinet, ariko tubivuga role yayo ukwayo, ariko muri executive dufitemo president, prime minister, hakazamo na cabinet. Cabinet ni aba ministry. Ministeri za 18 ku buzariyongera naho 18. Aha I will edit naho 18. Dufite ministeri zingahe? Makumyabiri. Sorry, 21. Recently, they created another Minister of Public Investment. That was 21, I think. 21 or 20? 20. Yeah, 20. So, iyo niyo cabinet. Cabinet irimo the executive of Rwanda includes the president, then hakabamo prime minister, hakabamo na cabinet members. Muri cabinet nyine habamo prime minister n'abaministiri biwe, n'abaministiri bose bahagarariye ministeri zabo zitandukanye. Hanyuma tukanavuga role ya Minecofin. Cabinet role yayo ni gutanga nukora analysis of the budget framework paper, ikanaba approved mbere yuko ijya muri parliament. Cabinet irabanza ikayicamo ikemeza budget framework paper, umushinga w'ingengo y'imari, noneho umushinga w'ingengo y'imari ugashyirwa muri parliament ugahinduka ingengo y'imari. So the parliament will approve ingengo y'imari. Okay, then Minecofin may also request that the cabinet approves the regulation relating to the enhancement of sound PFM. Minister of Finance, it is there to make consolidation of all budget by coordinating all stakeholders, by preparing the paper framework, by mobilizing resources, by supporting different budgeting agencies during budget execution, and by managing the cash requirements of the state through IFMIS. You know IFMIS. They are the ones managing IFMIS. Chamber of Deputies, they are the only body. They are the only body with the power to adopt the annual budget, okay, including budget revision. Because we do budget revision in Rwanda around December. So they debate and provide the comments on the budget framework paper. They draft budget estimates and they draft law. It is also the responsibility of the Chamber of Deputies to hold the government accountable on the use of public funds. Okay. And again, in this role, we have Auditor General. He's the supreme audit institution. His responsibility is to make the audit on how the public funds were used. We have finance professionals like you, the policy planner, the service managers. They are just involved in the budgeting cycle to ensure that the planning, accounting, and spending and others are in good harmony. They make sure that everything is in order, strategic objectives are followed. Okay, they form part in the elaboration of policies and procedures. Okay. Now, after this, we are going to see the budgeting approaches. The budgeting approaches, here we say, how do we make budgets? We have recurrent and development budget. In the public sector, there's an important distinction between development or capital expenditure. Ibi nabyo mu kizamini barabikubaza, ugomba kumenya gutandukanya development expenditure na recurrent expenditure. Development expenditure, these are the expenditure incurred for long-term projects like construction of schools, construction of dams, construction of roads, hospitals, health centers, education facilities, and others. Whereas recurrent expenditure, these are revenue expenditure which are the costs incurred for running day-to-day business of public entities. Bakikwaje wagisubiza mu kizamini. Development expenditure and recurrent expenditure.
Yes.
Okay. Development expenditure and recurrent expenditure. Development expenditure ni very long term. Recurrent expenditure ni very short term. PFM, sinzi mpamvu abantu hari abikora bakayitsimba, ariko PFM it is very simple. And the exam is around the notes. They don't go beyond these notes. And it is a very small book.
We are committed.
So I will share with you this note. I'll share with you some review questions that you can read and understand the all concepts.
Thank you in advance.
Olivier, are you still here? Maybe my colleague Olivier has gone. But I will ask him to share your emails. Or you can share with me. You are not too many. You can share your email on my WhatsApp, if I can say. I can see you are just 1, 2, 3. You are 3 people only.
Yes.
For us, we are studying as a group. We are using one device.
How many are you?
We are 2.
You are 2.
We were 4, but others were going. No, they had another class.
Hey. Okay. So you are 2 in one room.
Yes.
But I'm seeing 2 Giselle. Are you using 2 devices?
One device is it have small low voice.
Ah, okay. And it is muted. Okay. Budgeting approaches as we move faster. Now, again in an exam, they may ask you to use incremental budgeting. Iki kibazo cya incremental budgeting bazakibabaza. Ni imibare isanzwe. Dufite budgeting approach mu Rwanda zitandukanye. Iyi budgeting approach dufite budgeting approach uburyo duteguramo budget. dufitemo approach yitwa incremental budgeting. Incremental budgeting is a traditional budgeting approach. It's a traditional approach to budgeting which bases next year's budget on current year's results plus an extra amount for estimated growth or inflation for next year. This approach is known as incremental budgeting since it is concerned mainly with the increment in cost and revenues that will occur in the coming period. Incremental budgeting will have it is also a traditional approach in the public sector. That is the approach whereby you take the results of 2022, you base on them, you add 5% or you add 10% of increase of or estimated growth, or you cater for a specific percentage of the inflation that you expect in the next year. And then it becomes incremental budgeting because you base on the previous results, then you add some percentage to get the budget for the next year. In the exam context, the examiner may give you a budget or a budget execution report of the previous year, and he or she will ask you to prepare the budget for the next year. Then you will add a certain percentage of 5%, 10%, or even 20%, or some other changes, additions or deductions that the examiner may tell you. Okay?
Yes.
So that's what you call incremental budgeting. For instance, they may tell you, so the second, I was just giving an example. When we talk of the incremental budgeting, for example, we say if the actual costs Sorry. Let me see something here. So I was saying, when we talk of the incremental budgeting, we give an example that the actual staff cost for a government department For example, for the year ending in 2021, it was 9.3. So they say all staff awarded a 3% pay increase from 1st May. The staff budget for the year ending this because using increment budgeting will be 9.3 by simply, sorry, 9.6 by simply taking 9.3 of the previous year times 1.03, or by taking 9.3 plus 9.3 times 3%. That's what you call incremental budgeting. For instance, in an exam, let me see one question here. If we have one. You see, like, for example, this one. They say the Ministry of KNG started last week the process of preparing the budget of the next financial. The Ministry of National Economy, responsible for national budget, issued a guideline for using incremental budgeting approach across public institutions to speed up the process of national budgeting compilation, which will be presented to the legislature for approval next month. The Ministry of National Economy also instructed the public institution to cut the cost of contractual staff to zero due to negative impact of COVID-19 over government cash inflow. The chief budget manager of KNG called upon the heads of department to identify expected changes of expenditure for consideration in the next year's budget. The head of department reported the following changes to the chief budget manager. The cost of permanent staff will increase by 3%. The cost of transport will remain fixed. The capital expenditure will increase by 1%. Admin expense will reduce by 10%. Required. Explain incremental budgeting approach and compute budget estimates for the above budget line in the scenario that will be part of the next year's budget by considering additional information in the table below. You see, cost of permanent staff, current year's budget in Rwandan francs was 300 million. Cost of contractual staff was 20 million. Cost of transport, 5 million. Capital expenditure, 500. Admin expense, 3 million. Now, the question is, explain incremental budgeting approach. You will say incremental budgeting approach as we explained here. Incremental budgeting approach, it is a budgeting approach that is based on the next, that is based on the current year's results and add some extra amount of the estimated growth and inflation while preparing the budget for the next year. Or you can, it depends on your English, you can say it is a budgeting approach that bases the budget of next year on the current year's results plus some extra increments that is agreed by the management. It is a method of budgeting in which next year's budget is prepared by using the figures of the actual result as a starting point and make adjustment for any increment or inflation expected by the management. Okay? I think this question I'm projecting.
Yes.
Okay. Now, when I'm preparing this, what will I do? I will check, okay, the cost of permanent staff. What was the information here? They said, identify, they have said, the Minister of National Economy instructed the public institution to cut cost of contractual staff to zero due to the negative impact, which means the cost of contractual staff was 20 million. If I'm preparing the budget for the next year, the cost of contractual it will be zero. Is that okay?
Yes, sir.
It will be zero. I will put zero here. And then the information here is saying the cost of permanent staff will increase by 3%. For this permanent staff, I take 300 times 3%, then I get an increase. I add it to 300, I get the budget for next year. Is that okay?
Yes.
The cost of contractual staff, I will put 0. Cost of transport, they said it will remain fixed. I will put same 5 million in the next year's budget. Capital expenditure will increase by 1%. I will take 500 times the 1%. Okay? Times 1%, and I add it to 500. Admin expenses is 3 million, and it will reduce by 10%. Okay? I will reduce it by 10%. I will take 3 million times 10%, then I deduct it from 3 million. I get 2 million something. Is that okay?
Yes, sir.
So I hope you will be able to answer this one. Okay.
Okay.
This is questioning 33. I want to confirm if I have some suggested solutions. You see? Okay. Incremental budgeting is the method of budgeting in which next year budget is prepared by using current year's actual result as a starting point and making adjustments for inflation and other known revenue expenditure changes. The budget has been additional in computation. Cost of permanent staff, you can see they have taken 300 plus 300 times 3%. They get this. Contractual staff, 0. Cost of transport, 500. Capital expenditure, added 1%. Admin expenses, this. You get your marks. You know how many marks was allocated to this? This was in the section B. They ask you also the zero-based budgeting, a method of budgeting that requires each cost element to be specifically justified as. Zero-based budgeting is different from incremental budgeting. Zero-based budgeting, you define, you prepare your budget starting from 0. You don't base on the previous year. Okay? You ignore what happened the last year, and then you prepare your budget from scratch.
Yes.
So you will need to do the zero-based budgeting, and the zero-based budgeting is different from incremental budgeting in the sense that the zero-based budgeting, it rejects the assumption of inherent in incremental budgeting, because for incremental budgeting n'ibintu mwari mwarakoze ubushize bitagenze neza nabyo byo bikagarukamo, kandi ubundi mwaka w'umwanya mugatekereza mukavuga noneho dushaka kugana hehe, mukabudgetinga from scratch, ibyarangiye mukabyihorera. Izo nizo limitations. Inefficiency zagatemo ubushize niyo rukongero 5%, kandi wenda ibintu mubona muri gukora ataryo bicontributinga kuri economy y'igihugu kurusha ibindi, mwaka muhindura mukahindura budget line, mbese bikaba zero based budget. Kuba ikintu cyose kigiye kujya muri budget muri uyu mwaka kiba justified separately hatitaye ku byabaye umwaka ushize. That's what we call zero based budgeting. It is a method of budgeting that requires each cost element to be specifically justified as though the activities to which the budget relates were being undertaken for the first time. Without approval, the budget allowance is 0. Ni ukuvuga ngo buri mwaka mu budgetinga nta hari ubwa mbere. I hope it is clear. And before you implement the ZBB, the zero-based budget, the ZBB, you need to ask yourself some questions. Does the activity need to be carried out first of all? what would be the consequence if it is not carried out? Is the current level of provision adequate? Ese abantu kubaka hoteli muri aka karere birakenewe, ese idahari byateza ikihe kibazo? How much should the activity cost? The activity are costing angahe? Is the expenditure worth the benefits achieved? Ibibazo nk'ibi mukabyibaza mugafata umwanzuro wo kuyinkurudingamo iya item cyangwa se kutayinkurudingamo. So there are some steps in zero-based budgeting. This one you can read them, where you put you rank something in the packages. We have some mutually exclusive packages. Mushobora kubaka mukubakira rimwe. Sorry, mudashobora gukorera rimwe. Sorry, mutually exclusive. When you take one, you leave the other. Okay, so you will decide to accept one to be included in the budget or to be removed by assessing the costs and the benefits of different package. So that one package can be accepted, another package can be rejected. You can even do some incremental packages, which you can do in steps. So you rank them. After ranking them, you allocate them resources and you implement them. So that is incremental budgeting and zero-based budgeting. Another type of budgeting approach is program-based budgeting, where a budget is prepared in terms of programs. By focusing on objectives, the budget is therefore oriented towards the ultimate output of the organization. It will contrast with the traditional approach of budgeting, which focuses on inputs. This one focuses on programs. It focuses on programs. So give me like 1 minute, I come back.